those watching, thanks for joining us today. My name is Anthony Booth. I work for Pursuit in Business Development, covering the state of Connecticut. And I'm joined today by my colleagues, Kim Lingale, Assistant Vice President and Servicing Manager. Kim's team handles reporting and quality assurance, fielding the day-to-day questions of borrowers after the loan closes. And I'm also joined today by Tom McHale, our Executive Vice President of Loan Operations, who oversees the teams that manage the entire loan process, including the application process, closing loans, servicing the loan after closing, all the way through to maturity or loan payoffs. Today, we will be discussing business loan collateral. And, fortunate for me, Kim and Tom are experts on this subject. So I'm going to start with a kind of a big general question. And maybe I'll ask Tom to field this one. What is business collateral? And as a business owner or as a lender, what does that mean to us? And what should business owners know about what we mean when we say, business collateral?
Sure. So whenever we make a loan to a business, we have generally two sources of repayment. The first source is always the cash flow of the business, and that's our primary source. So when we're doing our credit underwriting, we're looking at their financial statements, their tax returns, making sure that we feel like there's a reasonable assurance that this loan is going to be repaid. The secondary source is collateral. So for any business loan, we would always have collateral securing the loan, and what types of collateral we require depends on both the items that we're financing within the loan application, the loan approval. So if we're financing, say, a building, then we're going to take a mortgage on that building. If we're financing equipment, we're going to take a security interest filing, or sometimes called a UCC, on that equipment. If we're financing, say, working capital, so it's more general, the business needs cash to grow or to operate, or even inventory, things like that, then we typically would take what we call an all business asset filing, which is more of a general security interest. So we're taking a lien on all business assets, and the terminology is usually now owned or hereafter acquired, which just means that our UCC filing covers everything the business owns as of date of the closing, plus anything they acquire in the future. And those are the more comprehensive liens that can sometimes get in the way.
So if I understand you correctly, business collateral can be everything from, let's say, the real estate that I'm looking to purchase with my loan, or a specific piece of equipment that I'm looking to purchase, all the way to like everything my business owns, all of the assets, my accounts receivable, all of those things, including stuff that I don't own yet, right? Future things that I might purchase. Does that sound right?
100%.
All right. So and this kind of gives me the clarity that really a collateral for a loan could be almost anything. Let's say I have collateral, a collateralized loan against a piece of equipment that I own, whether it's, with one of these kind of larger, sounds like blanket or all business asset type of liens, or a specific lien on a piece of equipment. And maybe Kim, you can kind of field this one for us. What would that mean for me if I want to sell that piece of equipment, or if I need to get some maintenance done, or if I want to replace it with a better piece of equipment because it's not working well anymore?
It definitely means that you should let us know as soon as possible, and to involve us as soon as possible, because that will ensure that we have an easy transition for you with your pieces of equipment. And then also it's easier for us to get your file up to date, because the main things in servicing whenever a borrower asks for modification is that we get all of the existing reporting requirements up to date. So that means your annual financials, your personal financials, your insurance, all of your insurance. Like if that isn't up to date, then it's going to take longer. And we want to make it easy for business owners to be able to succeed. And every loan program has different requirements. So that's one of the things that we look at as soon as a borrower reaches out for any kind of modification, is to make sure that that loan program allows the change that they're requesting. Because it's better for everybody if that work is done up front before anything is really impacted.
So if I understand correctly, step one, I want to change something. I want to sell equipment. I want to replace equipment. I want to buy new equipment. I should contact my lender. But I guess the reason why is there's some things to consider. Maybe the answer could be that's not allowed by the loan process, or maybe there may be some steps that we need to follow, either institutionally, or if I understand, maybe even with, like, let's say the SBA, the federal requirements of the loans that we have that need some hoops that need to be jumped through. Let's say if I need to replace that equipment, what does that process look like? And what should a business owner think about when, hey, I've got this piece of equipment, I was just looking, I went to this conference, right? And they just said, hey, this is the new printing equipment you should have, and it's going to help your business. And I'm thinking, yeah, I'm ready to buy. I'm talking with the seller. Oh, and so I contact my lender. What should I expect next? What's the conversation that I should be anticipating? What information should I have ready? Or
Well, your lender is going to have you reach out to either me or my team, and we'll walk you through every step of the process. So
Okay.
we'll give you timelines based on what loan program you have, based on, what you need to submit to us. And then depending on what loan program you have, we'll give you a time frame of that approval processes, because depending on the time of year, the SBA may have a longer or shorter lead time. And then we also have a couple interdepartmental handoffs that may or may not happen depending on the loan program. And then if it's a community development loan, we also check to make sure that that type of modification is allowed. And we walk you through all of that. So that's what's really cool about Pursuit, is that we have that customer service piece down, and that we're willing to walk the line with you.
Cool. And Tom, if I understand you correctly, for some of these liens, the lien's not just on the assets that I have that I may want to replace or sell. It's also on future assets that I attain. What does that look like as far as like, do I need to call my lender every time I buy a new vehicle, or, I want to buy, a new piece of equipment. So I'm not selling something that already has a lien on it, but, I've got the cash. I want to buy a new piece of equipment. What does that process look like? And what's the conversation I should be having with my lender if I want to, bring in something new?
Yeah, I think if you're, let's say you're a manufacturing company and you've got multiple, you probably have a lot of large pieces of equipment, but maybe you have some other smaller pieces that you're looking to either replace or sell, and maybe looking to buy something new. I think what you want to do is make sure you contact any institution that you have a loan with, just to find out or make sure that there's no lien filing, or if there is a lien filing, like making sure you understand what the requirements are, like Kim talked about. And if you're looking to replace one piece of equipment with another, or just looking to buy a new piece of equipment, usually what will happen is you're probably looking to finance it. You may finance it directly with the manufacturer. So manufacturers will offer good either direct loan or leasing terms for that piece of equipment. And what often happens is the manufacturer or the lender, the finance arm of the manufacturer, maybe it'll be a bank, they would often reach out to us at some point in their process, hopefully early on, not 2 days before they're ready to close. We're laughing and joking because unfortunately that happens more often than we like. But they'll often reach out to us and say, hey, we've got financing approval to buy this piece of equipment, or to finance this piece of equipment for a borrower. We noticed that you have a UCC filing or security interest filing on whether it's that specific piece or on all of their business assets. And we need you to take a step back on that specific piece in terms of collateral. We call that a subordination. So yeah, we go through, there's a process. They would draft a legal document that we would acknowledge that we're taking a lower security interest or a second security interest versus their first on that piece of equipment. And then that document would get filed along with the security interest as part of the UCC filing process.
And so if I understand that correctly, it just sounds like, having that conversation with your lender before you buy a new piece of equipment or replace a piece of equipment, it just saves you time, right? Because if you're already at the closing table, and then, the second lender, the manufacturer, is reaching out to us and saying, hey, please give up your lien position, then, we have processes that we may need to take. And if it's, an SBA loan, for instance, we may need to do certain things and to follow, SBA guidelines, which might involve contacting, the federal department and having some hoops to jump through with them. And if that process doesn't start until you're ready to close on a piece of equipment, that can delay how soon you can get that piece of equipment into your business and keep you working, especially if it's, let's say, an integral part of your growth, or how you want to, jump into the next phase of your business. We want to do what we can to help them, because it's in our best interest as well for the business to succeed and to thrive. But there just may be some guidelines that we have to follow, and it may not be 2 days for them to get that next piece of equipment if we're only learning about needing to, let's say, subordinate a lien or follow whatever process that we need on a collateralized piece of equipment at the last minute.
Yeah, I'd add too, like anytime we process a loan application here, we do a number of different searches, whether it's business or personal credit searches, that kind of thing. But if our collateral pool includes business assets, then we will do a UCC search at time of application just to get ahead of or get some insight into what liens they might have out there. Not all lenders may do that, which is why we often get cases where we're finding out 2 days before they're ready to acquire this piece of equipment that they need some kind of a subordination. The other thing I would say is if you're a small business and let's say you have multiple debts for maybe it's for different specific pieces of equipment or you have a mortgage loan on the building, we don't expect that small business to have all of their collateral documents at the top of their filing cabinet or at easy retrieval, but we know, and your lender will know. So that's why I'd say contact your lender to say, okay, what do you have in terms of collateral? And we can tell you very quickly, yeah, we have a security interest on this piece of equipment. We have a mortgage on your building. So we can tell you exactly what we have and then what you would need to do to modify or to request a modification of our collateral position.
It sounds like it's not only what you should do because it's going to help you save time, but will help you.
Yeah.
Yeah.
Absolutely.
Excellent. So, we covered a lot, but I'm wondering, is there anything else that business owners should know about collateral? I know I've learned a lot so far.
Yeah, I would add, if you're, let's say you're just looking to sell a piece of collateral, and there's a piece of equipment, it's not a good need for your business anymore. Maybe you've gotten into, if you're a printer, you've gotten into more digital printing or something. You've got an old, 4-color press on hand that you want to sell and you've got a market for it. And we have a lien on that asset. We will require it. If it's an SBA loan, they would also require that any proceeds from that sale go to pay down the debt. And we do the same thing even for our non-SBA programs. And part of the reason why SBA requires that specifically is one of their primary jobs is to reduce taxpayer losses. So any SBA loan that's outstanding obviously is a risk to the taxpayer if the loan goes into default. So whatever they can do to reduce that loan balance at any point during the process, and I don't mean like they're gonna come and accelerate loans and that kind of thing. If you're paying as agreed, you have nothing to worry about. But if you're looking to sell an asset, and let's say you wanted to take that cash to, even if it's just to like hire additional employees, SBA generally won't allow that. They'll require you to pay down the loan.
Wow. Okay.
One
And that's
of
definitely
my-
something I didn't know.
One of my favorite parts of my job is actually troubleshooting with borrowers and figuring out different solutions and like what the best course of action for them would be. So I mean, if I always encourage, like, if anybody has any questions, like, they should definitely reach out because I love walking through things like that.
Wow, Tom and Kim, thank you so much. I mean, there's a fair amount I know about collateral, but I certainly learned a lot of new things today. And I'm sure that, whoever's watching learned a lot too. And I think the valuable takeaway is that contact your lender. There may be some things they need to do, but also they want to help you, right? So you're going to be informed by the process, but there may be some documents or some information that they could give you that's going to help you along the process. There's going to be a Kim, sitting there waiting for your phone call that's going to help you guide you and help you to what's going to help your business. So thank you both today for joining me and for, being the experts on this subject and giving us some really valuable information.
Thanks, Anthony.
Thanks, Anthony.
Thanks, guys. Take care.